Wave here with the weekend video, and it's Saturday the 19th of May. I'm going to start with gold this morning. Alright, this is a daily chart of gold going back to the 2017 low, which is here. I'm going to adopt a slightly different format for the weekend reports going forwards. I plan to cover just a small number of markets, but in more detail, with particular reference to pointing out certain trading or analysis techniques. Now this chart here is an actually classic Elliott Wave pattern. We've got the first impulsive move up to here, and we then have an A, B, and a complete C, which is down to the 61.8% level here, retracement level of this this rally here. So this is a key support level, and we also want to see that this wave here consists of 5 waves. Okay, so we have the impulsive move up. We then have the A, B, and C. Okay, we're going to look at that in a bit more detail in a minute. When I see this kind of pattern, I'm not too concerned what went before, because if you see an impulsive move followed by an ABC, i.e. a 1 and then a 2, as long as it is complete, and obviously we need confirmation at this point that it is complete, then all you can really expect is the market to go ahead. Now, this is a probability thing, it's not guaranteed. I mean, there might be a 70% chance that we have a rally here, with a 30% chance it won't actually come in, or that the low is not in yet. That's what we're looking at in a minute. But it's a very solid pattern. It's worked for me many times, and it provides an excellent low risk trading opportunity. For example, this level here, the low came in at 1284, 1285, so you can get in here with a 7-point risk for a move that could, if it repeats this move here, which was over 100 points, give you a risk reward ratio of something like 15 to 1 or something like that. So an incredible risk reward ratio, very low risk entry point, and those two are the basic essentials of a successful trading policy. Right, so let's just go through the ABC in a bit more detail. So it's very clear: A, B, C. I mean, I hope that's a very clear pattern. This one's slightly more complicated. It consists of 5 waves, but they do overlap, so it can't be an impulsive move. In fact, there's actually 7 waves in there. So as this wave here and this wave here overlap, has to be corrective. It's obviously failed at the peak, so it can't be positive anyway. So this is the B wave. Then we've got a 5-part C wave. 1, 2, 3, 4, 5. And I projected the figure 1284 based on the fact that this move here would equal this move here. That's often a common relationship between waves 1 and 5 of a C. It's also quite common between waves A and C of an ABC. And you can see just by looking at them that this wave here is a very similar length to this wave here. So these are very useful relationships. And of course the fib retracement, 61.8%, is also extremely useful. Now, looking for a very solid rally on gold, so we're looking for some time now. So well over 100 points. If it breaks through here, we could see another 100 points from there. So it certainly could be a big move, certainly a big call. They issued a big call last week. I said it was triggered. So I hope all of my subscribers have now gone long with this position. Right, down to the 4-hour chart. This is the wave 4 peak of that ABC, so the 1, 2, 3, 4, 5, completing the pattern. So 1, A, B, C, 2, impulsive 3, A, B, C, 4. Now a 1, 2, 3, 4, 5. With this move here, which we'll look at in more detail in a minute. Right, down to the 30-minute chart to examine the final 5th wave here. 1, 2, 1, 2, 3, 4, 5. So the 3rd wave is a complete 5 down to there, and this is 4 and then 5 down to 1284 and 1285. Now the question is this an impulsive move? And right now we don't know. It's not an ideal pattern, but it depends on what happens next, basically. My expectation is it's going to go higher. I may be that may not be the case. If so, I'll be stopped out for. I mean, I've been risking quite a large position size, but quite very tight stops. which you can do with gold. I think gold is quite a nice market to trade actually with spread betting, because you do get these very tight opportunities. So it all depends on what happens next week. I think there's a fair chance we're going to see a decent rally. If not, I'm going to tighten stops quite quickly come Monday morning. We did have options expiry last week. That can be pivotal, but everything's in place for a decent rally now. And the first test to be a move above 1300. I mean, the resistance here is also important, but 1300 is a key level. Then 1320 is important, and then the peak here around 1325 thereabouts, and then upwards to 1360 and 1400, which is what I'll be looking for. Right, so that's gold out. Right, next the Nasdaq Composite, which is still giving a very bearish signal at this point. We have the 1, 2, 1, 2, 3, quite a big 4, 5, and then 4 and 5. So again, a very clear count, 5 waves down. When we see 5 waves down, we know to expect another 5 waves down at the minimum, followed by a clear A, B. Now in this case we could have seen a 1, ABC 2, 3, another correction here possibly, maybe a triangle, and so one more rally could be needed to complete this pattern. Of importance is the retracement here, the 78.6% retracement. Often wave 2s hit that level, which has already done in fact. So I don't think this is actually mandatory. Another move. I think we could see a move down quite quickly. I'm using my 6633 trading system so I've got stops at different levels all the way down here. So if it starts to move, this allows you to risk very little, but the cumulative effect is very, very powerful if you see a sustained decline or rally. Right, looking at this this move here, I think the triangular form is probably the best count. It doesn't count well as impulsively at all. So one more move up could just set the scene for the decline I'm talking about. If we do fall away again more quickly, then again it's a case of looking what happens on Monday. I wouldn't be surprised either way really. I think I'll probably, if we break down below 7320, I'll probably take some positions. And if we move up, I'll probably wait until we see some sign of a peak. Alright, finally look at Bitcoin. Now the first two charts were classic Elliott patterns. This one's a little bit more complicated. We've got two counts here. One is this is a 1, 2, 1, 2, 1, 2, 3, 4, 5. That's a 3, 4, and 5 to there with the orthodox peak here, followed by an A, B, C, B wave, and then a 1, 2, 3, 4, 5. So in this case, the corrective 2 wave, the 1 wave ends here. The corrective 2 wave makes an irregular peak, irregular correction, with possibly a major low coming in there. So we need to look at this action here, which we'll do in a minute, to confirm whether that count might be correct. However, there are alternatives. So one alternative is this is a 1, 2, then a 1, 2, 3, 4, 5, followed by a bit of a triangle as a 4th wave. Often the 4th wave is a triangle. And then the 5th wave. So the orthodox peak would be a 1 there. However, that then gives us a 1, 2, 3, ABC 4, 1, 2, 3, 4, 5. So that can't be a correction if it's a 5, and it suggests we're going to see an A, B, C, and another quite serious fall down. This moved here from 10,000 down to 8,000, 2,000 points, so we could easily test 7,000 in that case. So not too desperately serious. A move below 6,422 would definitely be a problem, suggesting a break below 6,000. That would certainly set back Bitcoin's recovery to 20,000 by a couple of months or so. Shake out a lot more of the people who are clinging on for dear life. But it's looking positive to me, but it just depends on how this pattern here develops. Well, when we look at this move here, it started around 7,920. There is no clear pattern at the moment. In fact, it looks fairly correct. I mean, if I had to count it as it was, in fact this sideways drift here is a bit of a, I mean it shows indecision, it shows we're at a key decision point, and nobody's quite sure which way to go. If you want to be positive, it could be a 1 2 1 2 1 A B C 2, but a sequence of 1 2 1 2 1 2 like that doesn't show enormous strength. It's not too encouraging. You really need to see the thing thrust up to dispel all this dithering about. Alternatively, it can easily be counted correctively. Could be a B C, B wave, A B C. So I think there's a fair case we're going to go up at this point in time, but it depends on how that move develops. A good solid thrust would be very encouraging and tend to confirm we have seen a low, but continuing dithering around is not going to be good for this market, and it really does need to clear the air, break 10,000 convincingly to realise its potential. I think the potential is there. I feel very strongly that we're going to go higher. It's just a question of from what level that's going to happen. So we had to wait and see on this one. The other two are pretty clear as to the outcome of these patterns. Just need the market to confirm, and of course the fact it's very clear still means it's only a probability, not a guarantee, obviously. So risk control essential, money management essential, stops in place either mentally or on the market. How you trade up to you, obviously, but I hope this video has been helpful. Feedback is always welcome. Please let me know whether you find this revised format an improvement or what you think. Anyway, thank you for listening. I hope you found that interesting and useful. I'm back with a report on Tuesday for subscribers. Have a great weekend. Thanks for listening, and bye for now.